On today's episode of the AI Investor Podcast from 24/7 Wall Street, we'll touch on why shares of ASML took a recent dive into the world of nuclear power, and walk through 3 new buys we're adding to the portfolio. All of that is next. Welcome back, everyone. I am David Hanson, and I am joined, as always, by my co-host and 24/7 colleague, Eric Bleeker. Eric, we're not a political podcast, but has anyone invented an AI to prevent these political texts from coming to my cell phone? I know I'm in a swing state here in North Carolina, but it's getting out of control.
Yeah, I got bad news. That's going to get worse before it gets better. So
we got 2 more weeks and maybe we'll solve that. Well, we've got a good show today. Like I said, we've got 2 new companies and 1 existing company that we're adding to in the portfolio. We're going to get to that in just a few minutes. Like we did last week, I wanted to do a very quick recap of the portfolio because we do have some new listeners coming to the show. Again, this is a $500,000 real money portfolio that Eric's putting his real money behind, allocating to his favorite companies in the AI space. And so far we have NVIDIA, Broadcom, Taiwan Semi, Synopsys, Coherent, and Credo as the portfolio. Again, going to be adding 2 more today, but that's just a quick recap. Eric, any just thoughts on the portfolio? Still early days, but just over the last couple weeks, has anything jumped out to you?
Yeah, I mean, a few key areas. NVIDIA up 18% since we did the show. That's a very large move for a company of that size. Continues to, grow on our thesis around a really compelling cycle for its next generation chips next year. That's Blackwell. Taiwan Semiconductor just had outstanding earnings. I'm sure we'll kind of touch on that in the show. Standouts performance-wise, Coherent, Credo, up 27%, 24%, respectively for those. So it's been a very good start for the portfolio since we first started announcing buys. The Nasdaq's of about 4%. So a good environment, but as we'll talk about on the show, there's still plenty of opportunities. We've allocated $80,000. We're going to put $30,000 more to work today. So excited about the new things we'll discuss today.
Awesome. Yeah, well, 27% in a month or so. We'll just annualize that. Portfolio should be in a good place. I'm sure that's what we can expect. As always, we said these companies can be quite volatile. We've had a great month here. Nothing to say we couldn't have a down 20% month in some of these companies just based on news flow or anything else going on in the market. So just a reminder that this can be a more volatile portfolio. So I wanted to jump first into a question we got from our listeners. Again, we take questions. You can email questions at 24/7 Wall Street. That's WALLST. This question came from Steven. He said, I know ASML is not in the $500,000 portfolio as of now. However, it was touted in the AI PDF. That was a report that we had on 247wallstreet.com that you can get for free. And I think you mentioned it on the first podcast. Does the recent drop represent a buying opportunity due to its importance this company has to the semiconductor industry? So, Eric, I think ASML after earnings was down as much as 17% or so. So pretty large drop for a company of that size. So what was your take? Is this a buying opportunity, even though it's not officially in our portfolio yet?
Yeah. And, I think Steven nailed it, that the important thing to know about ASML as a monopoly and probably the most important technology in the world, that's extremely compelling from a high level. And I did we did discuss ASML in that report he had referenced. Anyone can download that. It's Discover the Next NVIDIA. Just Google that. It's a 38-page report. It's absolutely free. We had released it. Now, one area is when I did that first, I talked about ASML in the first episode, it was kind of keystones. And when I did that first group of buys, I had said with semiconductor equipment stocks, of which ASML is one, I was kind of holding off because some of the near-term areas were a little frightening to me. For example, ASML, they are at the peak of geopolitical tensions. Right now, they're seeing a lot of export controls to China. So China's been basically overstocking on supplies to ASML. That's going to kind of go back. It's going to normalize, you'd say, next year. In recent quarters, they've been close to 50% to China. That's going to go down to 20%. The second aspect is competitive dynamics. Right now, we bought Taiwan Semiconductor first because they're kind of the only game in town right now. Samsung, I saw last week, there was a job posting from one of their rivals in the memory space, SK Hynix, and something like 200 out of 300 available Samsung engineers applied for it. It's just a very tough situation. There's a lot of question marks whether they can continue. And Intel, we've talked about their struggles on the podcast before. The key point is This gives Taiwan Semiconductor a tremendous amount of leverage over top ASML. And a big part of why I think ASML dropped is because Taiwan Semiconductor is essentially pushing out orders on their next generation. You'd call them high NA machines. And they can do that because they're in such a good negotiating position right now. So when we're looking forward to the future, I talked about this in the first podcast, but semiconductor equipment, the companies that basically sell the machines to Taiwan Semiconductor and Intel and the memory companies and across, everyone manufacturing semiconductor chips, they've been outstanding. When we look at the basket, the group of companies that you'd want that hold near monopolies in parts of this value chain, I'll just read them right now. This is a 10-year return. KLA, 778%. Lam Research, 913%. Tokyo Electron, 667%. Taiwan Semi, the manufacturer, 700%. Applied Materials, 775. ASML, 655%. So, David, the correct answer is you're not going to find returns like that just about anywhere in the market except kind of like the Meg 7, right?
Right.
These are companies that have had great dynamics. The dynamics are just continuing to change a little bit. And where that dynamic probably changes is where ASML, while they still have a monopoly, they're probably going to go back to growing a little bit more in line with a lot of their peers, just with some of the technology changes that are happening. So I've been waiting in part because I saw, this order stock in China. I saw ASML trading at a premium. I think after an event like this, I'm going to be far more likely to add ASML to the portfolio. But, I wanted some of that premium it had over these other companies in the space to kind of fade off. And what we probably will do when we add, you just look at those returns. The key isn't necessarily to buy one of these companies. It's to get the group, right? And we started with Taiwan Semiconductor, which is, it's kind of aggregating the machinery from all these companies. But we've seen that worked out really well. Taiwan Semiconductor up 13% after earnings. ASML down 17. We went with Taiwan Semiconductor. So I feel really good about the way that we've structured our buys in the portfolio. And it doesn't mean we won't add some of these other companies, but we're just responding to kind of where competitive dynamics are today. And that's really favored Taiwan Semiconductor.
So it sounds like, to the question of, and maybe again, we're not ready to add this to the portfolio, but if someone has been thinking about ASML, you're saying don't be necessarily scared off by this. This isn't a canary in the coal mine. Oh, things are going to get much worse. So if you've been thinking about it, now might be a time to pull the trigger. And if so, these other concerns you talk about of the dynamics of the industry, what is something that we should look for going forward when this, next quarter when they report, or the next couple of quarters? Is it margins? Is it just sales of where it's coming from? You mentioned China coming back down to earth. So what's the thing you're going to be looking at, hyper-focused on with ASML to understand kind of is this a problem, or is it just a one-time thing that we'll forget about?
Yeah. So, China sales are going back from about 50% of their business to 20%, and they're still going to grow their top line by more than 15% next year. That's right. Pretty good, right? So I think the key thing you want to watch with ASML, one of the fears is their backlog is a little low, which could lead to good sales in 2025, but create kind of an air pocket in 2026. You're really, I think, waiting for them to, I think they're stuck in a game of chicken with Taiwan Semiconductor. And once those sales go through, it's going to make the picture moving forward look much better. So if I'm watching them, I think they're in a perfectly fine competitive position. I just think they're not quite as advantaged as they were in the last decade. But again, I would feel I want to add this whole group over time. And I think ASML, it's still a foundational stock to own. It's just, if you're going to be able to buy it right now, you're going to be able to buy it without quite the premium it's had in the past, right? So if you're watching future earnings, though, watch those bookings numbers, because I think that's where a lot of the uncertainty is coming, whether or not they might be able to deliver on 2025 by have some air pockets ahead. I think they'll smooth that out. I think it's just, again, Taiwan Semiconductor, they're holding all the chips, no pun intended there. And that's what kind of scorched ASML this past earnings, I think.
Got it. Sounds great. So I want to move from ASML, Taiwan Semi. These are a lot of the companies in the portfolio are kind of in the background in the AI world, kind of the infrastructure, things that are necessary to build these outputs of, I go on ChatGPT and use the technology. A lot of the companies that we've talked about so far on this show have been these kind of background players, the infrastructure. I wanted to go to some companies that are more top of mind when it comes to the news, and that's Microsoft and Apple. So this week, Microsoft announced that it's releasing some new AI agents. Again, that's a trend we've talked about of inside these enterprises. Can you have functioning agents that go out and do tasks since that people used to do, and that obviously saves companies money. We talked about Salesforce had introduced these agents. So Microsoft introducing agents. So I want to circle back to them, but I also want to bring up Apple. We saw that Apple released a beta version of Apple Intelligence. This was something that was announced probably 6 months ago now, that they were going to be bringing AI features to their new hardware. So you need to upgrade your phone if you want access to this new Apple Intelligence that's going to be rolling out over the next year or so. So we have these two massive companies, trillions of dollars in market cap. Obviously, AI is a big story for them, and they're kind of more consumer and business facing. So when you see these news reports of, new agents and Apple Intelligence is rolling out, these are companies that we have not added to the portfolio. Should we care about these stories? Are these more just kind of marketing initiatives of Microsoft coming out and saying, hey, we got these cool new things, but maybe it's not really doing much on the business. Apple hasn't even released this thing. So how should we think about these companies that, again, have been huge winners of the Mag 7? They have the balance sheet to go and invest tons in this space. How should we be thinking about these companies that are at the front lines of kind of the consumer interface, just with some of the news from this past couple of weeks as a background to that?
Yeah. With Apple, there's a lot of expectations coming into this year for Apple Intelligence, especially across the summer. It seems like they're not going to see the kind of super cycle. A lot of people were predicting you call it a read through. You're looking at secondary companies to get a read at what Apple's doing. When we look at smartphone numbers from AT&T and T-Mobile, they're not really indicating that Apple's seeing a boom. Now, as you noted, should we be looking at this as marketing? One problem with Apple is when you're a company of that size, you have to be on a yearly cadence for new kind of releases, right? Mm-hmm. Apple always announces a new iPhone in September. They had Apple Intelligence as a concept, but as you noted, it's still in a beta form. I believe it's supposed to release on Monday in its first version. And even then, we're not going to actually see the features for this really proliferate until possibly spring of next year. They're looking at a really long ramp. So, it's kind of like some of the old, what were the old toys where it was like Star Wars. They couldn't make them in time for the holidays, so they would sell you a box that you could send a coupon later. That's right. A little what Apple Intelligence is right now. And I think something similar with Microsoft as well, that, they've talked about agents that will be on, I think it's Dynamics 365, Copilot Studio. As you mentioned, Salesforce beat them kind of to this, and this is their response. So I think there's going to probably be some bearish sentiment about some of these initial kind of consumer applications and the uptake on them. Apple's not going to probably meet the expectations people expected. Some of these early agent things, they're going to be about getting to market first rather than being truly helpful. I don't think that necessarily indicates anything about the long-term trajectory for these technologies. But again, I think it's going to probably create more of a bearish cycle because, again, most of these early releases, it's going to feel like a lot of very early internet things when you first worked with something and you keep hearing about how cool the internet is and you're like, oh, it's just a dancing baby, right? So I think it's more likely to disappoint in the near term, and we've already seen that with Intelligence, but I think that's less a reflection of the technology and it's more a reflection on these companies all knowing what an existential risk this is and being willing to, get out in front and position themselves as leaders.
If there is kind of that bearish sentiment of people being underwhelmed with the usage, again, I can already kind of see the Good Morning America segment on how Apple Intelligence got something wrong and suggested something so bad. Do you see that more likely to affect these smaller companies that are playing in the background versus a large company like Apple? Or where do you think that will kind of reverberate throughout the industry if there is kind of a bearish sentiment based on, hey, we're just not seeing the user level adoption of these features? Hey, it sounds great. AI can do all these things, but we're just not seeing people do it. Is it more likely to hit these front-facing companies or the infrastructure plays?
I think consumer-facing a little bit more because so many software companies are talking about integrating this, but it's not deeply reflected in sales. Whereas you go to semiconductor companies and they're more or less just kind of valued on their sales momentum. So, if you're a software company that's talking about big gains from including AI and there's several disappointing iterations, you're going to have more to lose in the near term.
Yeah, and I think I saw, it might have been out of Microsoft this week, and they're just talking about the rate at which things are improving. And you do have to remember, if there's these features that are released that they're underwhelming at first, to your point, the analogy of the internet maybe was a little underwhelming with dancing babies at first. It is hard to wrap your head around the rate of improvement and how something that might not be great today could be much better in 18 months, 2 years, just because we haven't seen that same. I mean, you brought you brought up Siri in the past. Siri's been around for what, 10 years or so?
Yep.
And it hasn't really gotten much better. I mean, I guess it's probably better than the original versions, but we didn't see that exponential improvement. But it sounds like the promise of AI, we should see the exponential improvement of some of these functions as the compute gets more advanced and gets better. Is that correct?
Yeah, and you see some glimmers of what's going to happen in the future. So Anthropic, which is the key rival to OpenAI, they released a new version for Claude 3.5, which is their, LLM. And they had said it basically allows Claude as an agent to take over your computer and finish tasks for you. And it's truly wild stuff to see, but, you're still squinting through it and going, okay, before this is really commercialized by a company of, Microsoft's size in a, wide scale fashion, there's still a lot of work to be done. So you see the releases today and you see the potential, but there's still a pretty large time frame between when these things go truly mass market.
Yeah. Okay. Any other news that you wanted to hit on before we move on?
No, I think the biggest thing, we talked a little bit about Taiwan Semiconductor's earnings. The company, they're expanding margins like crazy. One of the key themes that we had talked about when buying them was essentially the leverage because of their market position. They're at essentially 90% market share in advanced chips, but also that a lot of the services that they're providing, like what you'd call advanced packaging, because it's not just about shrinking transistors. It's about how you're, keeping memory closer to the actual logic die and things like that. These are high value add services and will allow them to increase their margins. We saw a substantial margin increase. The other thing I'd say, this is normally a pretty sober company. We talked about them. Sam Altman, who heads OpenAI, came in with some gaudy proposals, and they start calling him Podcast Bro, right? Okay. These aren't people that are taken to, hype very easily. They're generally conservative, and they had some very, very optimistic quotes about not only demand for AI in 2025, but into the extended future. Their revenue targets raised to 30% next year. Also in news for them, really interesting, their plant in Arizona is now online, and it's seeing higher yields. It's essentially seeing better manufacturing quality than even their plants in Taiwan. So some really encouraging news for Taiwan Semiconductor in the past weeks. And, a little spoiler, we might have a little more news on them later.
Okay, before we get to that, I wanted to actually play a new game. We try to keep the show a little bit light. I think in the first episode, we promised not to be too nerdy, not to be too boring. So I wanted to mix it up a little bit with a new segment that I'm calling Eric Fills in the Blank. We'll maybe think of a better name, but I'm going to give a statement and Eric's going to fill in the blank with his hot take. So the first one is: blank is a large cap tech name most likely to disappoint on the AI and stock front in the years ahead. So we've been really optimistic on this podcast, of course. We believe in the technology, but what is a company out there, a large tech company in the space, that you think is most likely to disappoint in the years ahead?
I would probably on this one go with Google. They're already, in a way, this is kind of baked in because they're where they're trading is a lot cheaper than other companies. They're at 23 times earnings. You look at Apple, closer to 35 times. There's some compelling aspects to Google as a stock. You could take what you'd call a sum of parts valuation, say, well, maybe YouTube's worth 500 billion, maybe Google Cloud's worth 600 billion. That's half the value. But I just don't love their competitive positioning. They invented the modern breakthroughs that are allowing AI to scale. They've done such a great job with their accelerator chips, and they're doing a pretty good job in their cloud division. There's so much to love about the company, but I do just wonder if their CEO, Sundar Pichai, is kind of the next Steve Ballmer. He's a company at the forefront of so much, and he's just not able to turn the ship around to really take advantage of it. I'm really worried about their competitive positioning in search. I think most people you talk to would say that search has kind of degraded. And underneath the hood, their market share for absolute search might be high, but in revenue, it's really coming down a lot. They're now under 50% of revenue from search. They kind of lost a battle that's been behind the scenes with Amazon for, shopping. So, there's been a lot that hasn't been going extremely well for Google, and they should be positioned. But you got to look at the recent history, and it sure seems like they are not able to effectively, take advantage, and they're going to be under threat. So they're going to be responding to those threats in the years to come. So that's, of the mega cap companies, that's the one I've probably been avoiding the most, even though it is in many ways the cheapest stock. So that's my answer for number one.
All right. Well, Sundar, hearing that he might be the next Ballmer as one of the top 20 richest men in the world, he'd be like, I'll take that. It's not a bad place to be, but I understand.
Go buy the Clippers.
Yeah, exactly. All right. My second one is blank. Wasn't on our list of 2025 AI trends, but maybe it should have been. A couple episodes ago, you gave a list of some trends that you're watching. Again, we talked about agents being one of them for 2025. What's something that was not on that list, but maybe you're saying, actually, maybe it should have?
Yeah, I think we had agents, the birth of mega clusters and the networking opportunity around that. And then we had the launch of Blackwell, which is NVIDIA's newest chip. I would probably add to that, and we will rectify the situation by talking about later, the power situation that's going on right now in America. You can't ignore it with every major company striking nuclear deals. It's getting a lot of press, but this is a highly complex situation. And I think with some really key opportunities that are getting me a little bit outside my comfort lanes. I normally don't like reading about transformer market share, but you kind of have to be in that environment right now. So we'll discuss that more, but the growth rate there is there's a lot of challenges to solve, and there's some substantial growth rate that presents opportunities for investors.
Awesome. All right. My last one is blank is a hot AI stock that is just too richly priced for me to touch right now. You mentioned Google, maybe not on your top buy lists, although it's trading at a lower valuation. What's one that you're just like, hey, look, I'm enthusiastic about the space, but this is getting a little bit too ahead of it?
Yeah, I think I really got to put Palantir in that spot. That's, again, if you download our Discover the Next NVIDIA report, which was kind of our first release onto getting people acclimated to the AI opportunity, we had Palantir in there, but was also worth dramatically less. I think when I started writing that report, it was in the teens. It's at like $43 now. It's at 35 times sales, which is about the same level as OpenAI. So it's valued at about the same multiple as OpenAI. And the reason is, I think there's so many people out there looking for platforms. We've been, kind of acclimated from all these past tech transitions to look for platforms, and they are probably the best public stock that you can build a narrative around kind of their potential for a platform. And I think that's just led to a lot of kind of feverish buying activity. So I want discount. I really like a lot of things that the stock is doing. I think the company is really commendable, but I haven't added it to the portfolio, even though we had as one of those featured stocks in the past, largely just because it's been a really feverish climb in its valuation.
All right, great. All right, that was our first edition of Eric Fills in the Blank. If someone has a better name,
what's your fill in the blank? What AI stock would you not touch right now?
Oh man, I honestly will have to get back to you next episode. You didn't prepare me. I'm the one asking the questions here. But I will come back with an answer. That's a promise to the listeners. I will give you. I don't want to disparage a company without my full research behind it.
I don't want to call someone the 20th richest man in the world.
All right, let's move on to our last topic. You talked about the big emerging story just in the last couple months. Feels like nuclear power is becoming a much bigger topic. 5-10 years ago, I don't know if anyone was talking about nuclear power other than maybe, can we just decommission more plants? It was just not on the radar at all. And now with the amount of energy required to operate some of this infrastructure for AI, it's needing to come back in a big way. So let's talk a little bit about nuclear power, why it's on your mind, and then let's talk about those the new companies that you're going to be adding to the portfolio.
Yeah, I mean, you said it, nuclear power, it had this boom from 1970 to 1990, and almost no facilities have been built since then. It's almost like saying, oh, what's the big trend for AI? It's paper, right? Like it's something so from the past, it's a little interesting that we're seeing a reversion back to it. But there are very important reasons that this is happening. So, as you mentioned, the background is we've seen a wave of nuclear deals. I've got them right here. It's Constellation struck a deal to give 3 Mile Island power supply to Microsoft. Google with the deal with Kairos. They're trying to create small modular nuclear reactors by 2013. Amazon has a deal with a nuclear plant in Pennsylvania. Oracle has talked about using nuclear power. So it's kind of like everybody on the ship. Clearly, something important is happening here. And we need to understand why that is and what profit opportunities there might be across the value chain. So, what nuclear does, it provides a lot of power density and consistency. And importantly, as well, it's clean energy. All of these companies have signed pledges to essentially be carbon neutral. So if you want to spin up a lot of coal power, that is a big time non-starter. They would not be fulfilling the promises they've made. So they need some ability to be able to get this consistent high density power that's clean. And nuclear is one of the easiest ways to fit the bill. So if we're looking at kind of the numbers behind this, let's establish the situation with data centers and what the opportunity is. Right now, data center capacity has been growing at a compounded annual growth rate of about 12 to 15% annually. That's about to spike to 25%. So you see a doubling in that rate of change. 90% of this power growth is going to be driven by AI. Now, globally, data centers will only be about 4.5%. I'm getting these numbers from Semi-Analysis, which they do a lot of really in-depth research and tracking, and they've estimated about 4.5% by 2030, which that sounds very manageable. But here's the problem. Almost all this new power generation is being built in one place. That's the United States of America, and that's where 70% of new power generation is going to happen for this AI boom. Why is that? Well, the average cost of electricity in America is about it's 8 cents per kilowatt hour. In Europe, that number is 18. You go places like Great Britain, it's like 23 cents. So, I mean, the cost to operate one of the, gigascale data centers in the US would be 300 million to 400 million power a year. In a place like the UK, it would be over $1 billion annually. And they're going to have a lot of these. So you can start seeing how much that adds. The only other regions in the world that can, produce power at a scale and cheapness relative to the US is China, which that's a non-starter politically, right? You're not going to keep all your data in China, full stop. Second, the Middle East, which they are starting to build some data centers. But again, you have a political situation where it's like, if we have the cheapest power, most of the companies that are leading AI are in America. And while America's regulatory situation is not perfect, we'll describe that a little bit more later, it's much better than areas like Europe, where getting started on incremental power generation is close to impossible. So add this all up, and here's kind of the bottom line. U.S. power generation from data centers is expected to grow from 4.5% of the total to 14.6% in a 5-year span. This is causing incredible stress on the grid because power generation in the U.S. has been largely flat since 2000. So we go from 20 plus years of no change to all of a sudden a huge step change. Regulatory wise, that's stressing things. It's about 5-year wait to connect new clean energy to the grid. Mm-hmm. We're talking about this jump in 5 years. If you're waiting 5 years, that's impossible. Supply chains. Elon Musk famously said we can't even build enough transformers. There's so many pieces and components in power supply to get here. So you can see why this is attractive, because it's an industry that's been largely static and it's about to see this incremental boom. We're always looking for that. Where is there a step change? Where is there an incremental boom? And, is it still underestimated by the market? So you look at nuclear power, this is why people have been running to it. It's something that every company is striking a deal with. The problem is this incremental data center demand, it's going to require about 60 gigawatts of new power in the span I've been talking about. So one of those nuclear deals, like the one that Amazon struck, that's 1/100th the need. And then you look at what Google's building, which is the project with Kairos, it's an ambitious target, and they're hoping to get things done by 2030.
Wow.
So the problem with nuclear, right? It takes a long time. The costs are all front loaded. The other problem is the costs are in steel, they're in concrete, they're in labor. Those are all things that generally kind of increase in time and with demand. Whereas the other power sources that are growing, like solar and batteries, they actually have scaling laws to make them cheaper. So if nuclear takes 10 years, you might actually have cheaper alternatives by the time it's ready. So David, I trust, you can follow, right? Nothing is simple here, right? Nothing.
Right.
This is a very complex, situation at hand.
And then you sprinkle in how people feel about nuclear, and there's a lot of fear, and it doesn't help things.
And then you have that. So I'm looking at the situation. You had asked which stocks are overheated in that last lightning round, and I did say Palantir, but Oklo would be another great one for that answer, because that's Sam Altman's company that I think it went public through a SPAC, and it's nuclear power focused. It was up 150% just a week as some of these deals broke, right? So there's a lot of people chasing enthusiasm, but the picture around whether or not nuclear is actually the majority of the solution, or it's a small amount of the solution to basically power the largest data centers, those are two different issues. So here's what I'm going to focus on today. And I'm going to add two recommendations focused on this. I want to focus on this boom in data centers, all these numbers I've talked about, because data center spending for just the facilities is expected to grow from 49 billion in 2023 to 167 billion in 2026. So that's more than a threefold jump in just a matter of years. You can look at where the spending's going. Roughly half of it's in power systems, up to a third of it's in cooling systems, and the rest is, miscellaneous stuff. So one of our key themes that we've talked about, one of our trends for 2025, is the growth of Blackwell. Well, this is the new chip from NVIDIA. One of the features of it is incredibly power hungry, and the NVIDIA chips are just going to get more power hungry. So that has, a power outcome. It also means that if you put these chips too close together, they will essentially cook each other, right?
Yep.
You will lose it. So you need to have advanced cooling strategies. So the company that we're going to add first is Vertiv. David, this is a company you own in your own portfolio. It's one I've looked at. It's ticker symbol VRT. They have a very wide portfolio of power supplies, things like switch gears, basically the power systems to make sure that, these data centers get continuous power. But they've made a significant investment in cooling systems. And this is pretty advanced technology. You're actually taking the cooling systems to the chip itself, a plate above it to dissipate all the heat. So, they have this. It is now essential technology, largely thanks to the growth of where NVIDIA is driving the market. And what this is going to do, they can command higher margins on this because it's very complex technology. And also, as these companies, Microsoft's going from like 180 data centers to 900 in this 5-year stretch. As these companies are looking how they get to market faster, how they build faster, companies with this design and build expertise like Vertiv that have been building it for years, now they get to apply this all into a window of intense demand. So I love the competitive positioning of Vertiv. I love how their products fit. I love their ability to drive margins. I love their executive team. They're led by the former CEO of Honeywell, who's kind of legendary in this industrials market. He has a big vision for the company. On a trailing basis, they look expensive, but if you look to forward earnings, I have them at around 30 times forward earnings. And then as we've talked about, we can see the data center projections that these companies have made. I think there's going to be a lot of incremental spending for Vertiv, not just in that 2025, but into the uncertain years we've talked about, 2026, 2027, 2028. So I like their ability to continue growing earnings. It's a company that's run up a lot, but, I think, could this, see another double in the years to come? Yeah, I definitely see the potential there. The other stock I'll be adding to this is Schneider Electric. And there's no rocket science to this. They are just Vertiv's number one competitor. They've got a little bit wider portfolio in some of the power equipment. They did a major acquisition to get more cooling. And I just see them kind of as the two top dogs. And I want the two top dogs in this kind of growth rate. So, David, I know that was a lot. We almost need a PowerPoint to break this all down. But the key theme here is we walk through, whenever I'm looking for a new aspect of the trend, I want to break it down from its most foundational levels, because I think, getting the trend right is probably more important than the specifics of the individual stocks. So we've really framed this trend, why we like as kind of a first play, this infrastructure equipment. We've picked out our two companies. And if we want to go back in the future and we want to add, a nuclear play or something like that, we can, but we've gotten kind of those foundational and structural winners, and we can add more across them now that we've kind of established this opportunity.
Would you say a theme that you're seeing out there is these companies are making huge investments in Blackwell? We talked about the price of Blackwell is up considerably from what prior generation chips were. Right now, the ability and its abilities are much greater too. So that's why they can command a higher price point. Do you see these kind of supporting plays as, hey, these companies are investing so much in the chips, you might as well also invest in making sure you get the most out of the chips, so you don't have issues? Is that kind of a way to think about it? Is they're making such large investments in these data centers that of course you're going to kind of add on these incremental things to get the most out of your data center. It almost makes you think about, you're redoing your kitchen. It's a huge expense. And it's like, oh, do you want to add in this nice lighting? And it's not a huge cost, but it'll make your kitchen a lot better. Is that a way to think about it? That they cost less for the companies, but they help the overall output so much that it's just a no-brainer to continue to invest in them?
100%. Meta was almost finished with some complexes of data centers. They bulldozed them and rebuilt them because they wanted better power supplies. They wanted the ability to do a lot of this, advanced cooling. It is table stakes that if you're going for an AI data center, you need to go and do this, because you said having failures in, these huge training clusters, that incredible amount of cost. You're not seeing great utilization on your chips. You're spending so much on your chips. You need to do everything possible to get your utilization as high as possible. That's what we've talked about with networking. It's what we're talking about with infrastructure. So I think that's a perfect way of framing this up. If you're going to make this big investment, you're going to see incredible ROI from doing these surrounding areas well, whether it's networking or whether it's, actually getting, your power supply, built. It's not just about, with cooling, it's not necessarily just about reducing electricity costs. I mean, that's part of the equation, but again, it's about ensuring that you're not seeing high chip failures that not only cost you on the chip side, but again, might ruin training runs that are incredibly expensive in terms of, amortizing the cost of your chips. So I think there's every incentive in the world, as long as they're spending on these chips, to also spend in these markets as well.
All right, great. So those are the two companies. And can you give us the names and tickers again, just in case someone was...
Yeah, Vertiv, VRT, Schneider Electric. Now, this one trades twice. I'm probably going to pick up in Europe, but they do have an OTC with reasonable volume if someone wants to pick it up in the United States. Also, Twist, I'm adding one more stock here. I teased it earlier. I would like to go and just continue adding back to our Taiwan Semiconductor buy. It's up about 13% since we had made that initial announcement. But, again, we're responsive to trends we're seeing. And I looked at Taiwan Semiconductor's earnings. I continue to love their competitive positioning. As I mentioned, we'll probably buy more of some of these individual equipment plays playing into them. But for now, I'm happy to continue adding them to get more exposure to kind of that category of these, arms suppliers to the AI industry. So total $30,000 today, 10,000 Vertiv, 10,000 Schneider, 10,000 Taiwan Semiconductor, 110,000 in the portfolio invest in total.
All right. We still have a lot of dry powder, more names to come. Again, just the full recap of the portfolio. Now we have NVIDIA, Broadcom, Taiwan Semi, Synopsys, Coherent, Credo, Vertiv, and Schneider Electric. So that's 8 companies.
We are just getting started. I think eventually we'll have 30 plus. And like I said, today we do this dive into kind of the, electrical, value chain and what's going on. That's just an initial beginning. And I think we'll add more names in the weeks to come. There's some nerdy topics like multi-data center training that I have some ideas on. And we can only pack so much nerdery into one episode.
Multi data center. I might need to find a replacement for that. That might be too nerdy for me even. All right. Well, that's all we have for the show. As always, please leave a rating, a review. We'd really appreciate it. Whether you're on Apple Podcasts or Spotify. We'd love to hear from you. Questions at 247wallstreet.com. Please send them in. We'd love to take them. Again, if we don't get to them on this show, Eric's got them all, keeping track of them, and we will get to all the questions that's asked. Eric,
yeah, and David, it's worth mentioning too that if we don't get to some questions, we'll start putting some too on our YouTube channels, just audio extras to podcasts. So if you're not following that, if we do that, I'll respond to anyone individually, letting them know. But there's multiple ways to follow the show and get more content. One of which, subscribe to our YouTube channel. We're putting new content up every single week.
Yeah, please go subscribe to YouTube. You can see us in person. You can see Eric passionately talk about nuclear power in his lovely blue shirt. So if you want to see what the heck we look like, please go to YouTube, hit subscribe. We'd love to see you there. See everyone in 2 weeks. People on this show may have interest in the stocks they talk about. This is not investment advice, so don't buy or sell based solely on what you hear.